Welcome to Simply Explained Academy. Today, we're diving into the 15 absolute must-know crypto and Bitcoin terms for total beginners. Think of this as your personal crypto glossary. No confusing jargon, just plain English, like we're sitting together over coffee. So grab your drink, get comfy, and let's jump right in. All right, first things first, cryptocurrency. What is it? Well, at its core, it's just digital money. But here's the cool part. There's no central bank or government running the show. Instead, cryptocurrencies live on a blockchain, which is like a shared digital spreadsheet everyone can see and verify. Transactions are transparent, secure, and once they're in there, you can't change them. Whether we're talking Bitcoin, Ethereum, or established stars like Solana, these coins let you send value around the globe without needing a bank or PayPal. Next up, the heavyweight champion, Bitcoin. Launched all the way back in 2009 by the mysterious Satoshi Nakamoto, Bitcoin is often called digital gold. Why? Because there will only ever be 21 million Bitcoins in existence, ever. That built-in scarcity is what gives it long-term value, kind of like how gold is valuable because you can't just create more of it out of thin air. Over the years, early adopters who held through all the ups and downs, those wild price swings, have seen massive gains. And even though Bitcoin has matured a lot since those early days, it's still making headlines. Big companies are adding it to their balance sheets, and institutional investors are increasingly seeing it as a valuable asset class. Bottom line, Bitcoin is still the foundation of the entire crypto world. Whether you're a hardcore Bitcoiner or just starting out, it's the benchmark everything else gets compared to. So, what exactly is this blockchain thing? Picture a chain of blocks, each block packed with a bunch of transactions. Once a block is added, you can't alter or delete it, ever. Plus, every computer in the network keeps its own copy of the entire chain. That means there's no single point of failure, no central boss who can censor or rewrite history. This decentralization is what makes blockchain so revolutionary. It's tamper-proof, transparent, and open to anyone who wants in. All right, so let's say you've got some crypto now. But here's the next question. Where does it actually live? Nope, not in your pocket. It lives in a wallet, but not the leather kind. I'm talking digital wallets, and there are two main types you need to know about. First up, you've got software wallets. These are apps you can install on your phone or your computer. Think names like MetaMask, Blue Wallet, or Trust Wallet. They're super convenient, great for quick transactions, checking your balance, that sort of thing. But here's the catch. If your device gets hacked or stolen and someone gets access to your private keys, your crypto's gone. No undo button. Then there's the second type, hardware wallets. These are physical devices, like a USB stick almost. Brands like Ledger and Trezor are the big ones here. The cool thing is, your private keys stay offline, locked up safely inside the device. So even if someone hacks your computer, they still can't touch your coins unless they physically have that hardware wallet. Way more secure for long-term storage. So what should you do? Here's my take. If you're just using a little crypto day-to-day, a software wallet is totally fine. But if you're holding a larger amount, like something that would really hurt to lose, then seriously, get yourself a hardware wallet. It's a small investment now that could save you a huge headache later. Your future self will 100% thank you. Now, let's talk about the private key, the most critical piece of your security puzzle. This is a super long secret number that proves you own the coins in your wallet. Think of it like the master PIN to your bank account, except infinitely more sensitive. If someone gets hold of your private key, they can empty your wallet in seconds. So guard it like your life depends on it. Seriously, no sharing, no screenshots, no typing it into sketchy sites. Now imagine you lose your wallet or your computer crashes. How do you get your crypto back? That's where the seed phrase comes in, also called a recovery phrase. It's a list of 12 or 24 random words that regenerate your private key. Write it down on paper and stash it somewhere super safe, a fireproof safe, a deposit box, whatever. And please, don't photograph it or store it in a text file on your phone. That's just asking for trouble. Then there's your public address, which you share freely. Think of it like your bank account number. You give it out to receive funds. People send Bitcoin, Ethereum, or any other token to that address, and boom, it shows up in your wallet. No risk there. It doesn't expose your private key or seed phrase. Now, how do you actually buy crypto? You use an exchange like Coinbase or Binance. You sign up, complete identity checks, deposit fiat currency, like euros or dollars, and then place a buy order. Each exchange has its own fee structure, so compare rates and pick one you trust. And here's a pro tip. If you're not actively trading, transfer your coins off the exchange into your personal wallet. Exchanges can and do get hacked, so don't leave your funds lying around. Now, crypto markets are wild, swinging between bull and bear phases. A bull market is a period when prices steadily climb, confidence is strong, and investors believe the growth has no ceiling. A bear market is the opposite. Prices fall, fear sets in, and people start panic selling. Recognizing which cycle you're in can help you avoid buying at the top or selling at the bottom. Though I get it, emotions are tough to control sometimes. Related to that is volatility, which simply means how much and how fast prices move up and down. Crypto is notoriously volatile. One day you could be up 10%, the next day down 15%. For beginners, those swings can be heart-stopping. The trick is emotional discipline. Don't obsessively refresh your portfolio every 5 minutes, and only invest amounts you're comfortable seeing drop by half in a downturn. Now, anyone who's been in crypto for 5 minutes has heard of hodl. It started as a typo of hold on a forum post and evolved into the mantra, hold on for dear life. The principle? Don't panic sell during dips. Hold your coins for the long haul. Historically, those who hodled through multiple cycles have seen huge rewards. So if you believe in a project's long-term vision, strap in and hodl. Now, timing the market perfectly? Good luck with that. Instead, consider dollar cost averaging. You decide on a fixed amount, say $100, and buy that every week or month, no matter what the price is. When prices are high, you get fewer coins. When prices are low, you get more. Over time, your average purchase price smooths out, making your entry less painful. Now, let's talk tech for a sec. Bitcoin uses proof of work. Miners run powerful computers to solve cryptographic puzzles, and the first to solve adds a new block to the chain, earning freshly minted Bitcoin as a reward. It's super secure, but it's also energy hungry. That's why you hear debates about Bitcoin's environmental footprint. On the bright side, a lot of mining is shifting to renewables, which is a step in the right direction. So, to cut down on energy use, many major blockchains, like Ethereum and Solana, use proof of stake. Instead of solving puzzles, you stake your coins as collateral. The protocol randomly selects validators based on how much they've staked to verify transactions and add new blocks. It's way more energy efficient, and you earn passive rewards for helping secure the network. And finally, we've got gas fees or transaction fees. Every time you make an on-chain transaction, you pay a tiny fee to compensate miners or validators. On Ethereum, when the network's busy, you can pay tens of dollars in gas. On Solana or Binance Smart Chain, fees often stay under $1. Always check current fees before you hit send, or you might end up spending more on fees than on the actual transfer. Now, you've learned the core crypto terms, from how blockchains work to keeping your coins safe, and smart strategies like hodling and dollar cost averaging. With these in your toolkit, you're ready to explore crypto confidently. Remember, always do your own research, never invest more than you can afford to lose, and enjoy the journey. If you found this video helpful, go ahead and smash that like button, subscribe for more content, and hit the notification bell so you don't miss our next deep dive. Drop a comment below. Tell me which term surprised you the most or which one you'd like me to cover in more detail. Thanks for watching, stay curious, and I'll see you in the next video.